Hi, I'm Harris Benson with John Doherty Realtors. Happy Market Data Monday. I'm sitting here with a good buddy of mine, Josh Young of Bison, and today I wanted to do things a little bit different. We've been actually talking about doing this for a while, which is focusing on a talk about the oil and gas industry here in Houston, and it being September 15th that we're recording this. 2 days ago, a pretty large world event happened in Saudi Arabia. Josh and I kind of texted back and forth. We're like, okay, we need to talk now. So for those who aren't really aware of what did occur Friday night, Saturday morning in Saudi Arabia, could you kind of bring people up to speed on what did occur?
Sure, and thanks, Harris, for having me. Friday night, Saturday morning, it's unclear whether it was a drone attack or whether it was a cruise missile attack or a combination. And various sources, including the U.S. Secretary of Defense and other high-placed U.S. officials, have said that this attack originated with Iran, whether it was geographically from Yemen or geographically from Iraq or geographically from Iran. They believe that the source of the materials to blow up this large oil processing facility along with a oil producing field, they believe it came from Iran. It looks like right now there's a little bit over 6 million barrels a day of oil processing offline, along with 1.5 million barrel a day oil producing field that's unclear whether or not that's offline. And then Ghawar, which is the largest oil field in the world, has been reported to be flaring natural gas, which means that they're not able to produce the oil that they would be producing otherwise.
So in this oil field in Saudi Arabia, is there a percentage of the world's production this is affecting? Kind of give people kind of perspective?
Yeah, absolutely. So from the reports of what's offline, it looks like there's a little bit over 6 million barrels a day offline versus about 100 million barrels a day of worldwide oil and gas production and consumption. And so 6% for a commodity that has a very, where the marginal and elasticity of demand is very, very low. As the price goes up, you don't actually see demand move that much. And so there's a lot of risk that if you have a lot of supply taken off the market, and if there's only a little bit too much or too little supply before that event happens, you could see, they call it a supply shock in economics, and you could see actually the price move quite significantly on Monday.
Interesting. So you talk about supply, and sometimes when I talk about neighborhood, I'll talk about inventory levels, certain amount of months, right? If there's 3 or less months of inventories more of a seller's market, 5 to 7 more even, and then 7+ more of a buyer's market. Are there similar brackets in the oil and gas industry when it comes to price per barrel or inventory levels?
Yeah. So there's a few different, like we talked about, there's a few different sources of or like measures that can be used beyond just the price for oil per barrel at a given moment. And a really good one that I follow is days of supply. And so, or I guess days of demand. So if you have, let's say, 50 days of demand, that's like pretty good, because that means if there's a world event like just happened, you have enough oil on hand in the US outside the Strategic Petroleum Reserve to be able to have 50 days where if there was no supply, you'd have at least that to be able to power cars and trucks and the various other chemical uses for oil. So about 50 days is a good indicator. The amount of days of supply in measure has actually been falling a little bit, just as there's been more production here in the US. And so as that happens, there's less need for as much oil to be in inventory, but it still matters a lot, and events like this are reminders of how much it matters to have at least some inventory, both in days of supply in the commercial inventories as well as in the Strategic Petroleum Reserve.
Yeah, it's really interesting. One thing that I think about a lot, and I know I've asked you this before, is not only for those who want to keep an eye on the event that just occurred, but just how oil and gas industry's doing down the line. What are some of the outlets that people should be paying attention to so that they can stay kind of educated on that industry?
It's a great question. I think it's like one of those hard things that you probably struggle with on the real estate side
For sure.
too. There's lots of information and a lot of it's not so good.
Right.
And so, I write sometimes on Seeking Alpha, which is a good outlet, and they're just like anything else. There's good information and bad information and everything in between. But I've been able to find a number of different good sources there. And one of the ways I can tell a good source is if they say things that end up happening more often than they don't. So I guess just as a barometer, I guess it's kind of like a dumb barometer, but so there's a number of different sources on Seeking Alpha. There's a number of different sources on various news sites, and there's also various data sets that are pretty interesting. So like the rig count is pretty interesting, as well as the days of supply and other inventory data. And there's a weekly measure that comes out from the EIA that's pretty helpful in terms of tracking the direction of the industry.
Got it. And today we're obviously sitting here in Houston, and most people watching, not everybody is from Houston or is currently living in Houston, but for those who are, how should they take not only the news from a couple of days ago, but how should they react to news down the line of oil and gas as it pertains to the economy here in town?
That's a great question. So one thing that's really interesting, and that's changed a lot over the years, is that energy as the percentage of the S&P 500, so of the stock market, has gone to an almost all-time low. So it used to be as high as 20%, and I think in the 80s it might have even been like 24% of the overall stock market. And depending on exactly which measures you use, it's somewhere in the 4.5% to 5.5% range right now. So one thing, there's been a very powerful trend in investing towards passive investments, which is very good because active investments tend to do less well than passive. The downside is if something's done poorly for a while, it gets underrepresented in passive indexes. So, people here in Houston tend to be pretty long energy through their job as well as through various personal investments they've made. But if you're just passively indexing, and obviously subject to your various particular personal financial criteria, but it probably makes sense to consider going overweight either an energy index or particular energy stocks that you happen to be familiar with or can get comfortable with. As well, it might make sense actually to take Houston real estate a little more seriously because this long downtrend in the industry has probably hurt Houston valuations relative to other Texas cities like Austin and Dallas, as well as relative to the overall U.S. real estate city markets. So those are probably two places to look at from a personal perspective.
Yeah, for sure. And we were speaking about this before. The one thing with real estate, sometimes it's very quick to react, right? If something major occurs in the job market or in a world market like oil and gas, obviously buyers might halt or sellers might halt from what they're doing, or they might do the opposite depending on what occurs. But you really don't see the financial ramifications until kind of months later as you see the trends go up, down, or stay kind of flat. Obviously today there's been a ton of information thrown at you, and I certainly appreciate an expert like Josh of Bison Interest sitting down with me today to kind of walk you through some of the things to keep an eye out for. But Josh, for those who want to keep tabs with you and with the energy markets, how can they find you or the things that you're writing?
So we link some of the content that I'm involved with on my website, bisoninterest.com, as well as on Seeking Alpha and other relevant platforms.
Well, awesome. Well, thanks again for being here. This is Market Data Monday. I hope you guys really enjoyed this conversation, and I hope you guys have a great week.
Thank you.